Stock market shock. Sensex falls 508 points. Nifty slips below 23,400. What's next for investors? Hello everyone, welcome back to the channel. If you're an investor or someone who closely follows the stock market, today's trading session probably caught your attention. Indian markets witnessed another day of heavy selling pressure, with both benchmark indices ending sharply lower. The Sensex dropped more than 500 points, while the Nifty slipped below the important 23,400 mark. So what exactly caused this decline? Which sectors were hit the hardest? Which stocks managed to outperform despite the market weakness? And most importantly, what should investors expect in the coming days? Let's break it all down. The Indian stock market closed lower for the fourth consecutive trading session on June 1st. The BSE Sensex fell by 508 points and settled at 74,267. Meanwhile, the NSE Nifty 50 lost 165 points to close at 23,382. The day started on a positive note. Markets opened higher, and investors were hoping for a recovery after recent weakness. However, those gains quickly disappeared as selling pressure intensified throughout the session. By the end of the day, bears were firmly in control. One of the biggest reasons behind the market decline was growing geopolitical uncertainty. Investors remained concerned about rising tensions in the Middle East, particularly developments involving Israel, Lebanon, and Iran. Whenever geopolitical risks increase, global investors become cautious, and riskier assets such as equities often come under pressure. Another major factor was the sharp rise in crude oil prices. Brent crude moved above $93 per barrel, raising concerns about inflation. Higher oil prices can increase transportation and manufacturing costs, putting pressure on corporate earnings and bullish economic growth. Since India imports a large portion of its crude oil requirements, rising oil prices are generally viewed as negative for the economy. Adding to the uncertainty is the upcoming RBI Monetary Policy Committee meeting. Investors are eagerly waiting for the Reserve Bank of India's comments on inflation, interest rates, and economic growth. While many experts expect the RBI to keep interest rates unchanged, market participants remain cautious about future policy guidance. Now let's talk about sector-wise performance. The biggest losers were FMCG, realty, auto, consumer durables, power, and PSU banking stocks. These sectors witnessed significant selling as investors reduced exposure to domestic growth-oriented sectors. Adding to the uncertainty is the upcoming RBI Monetary Policy Committee meeting. Investors are eagerly waiting for the Reserve Bank of India's comments on inflation, interest rates, and economic growth. While many experts expect the RBI to keep interest rates unchanged, market participants remain cautious about future policy guidance. Now let's talk about sector-wise performance. The biggest losers were FMCG, realty, auto, consumer durables, power, and PSU banking stocks. These sectors witnessed significant selling as investors reduced exposure to domestic growth-oriented sectors. Among the major losers on the Nifty were Hindustan Unilever, Tata Consumer Products, ITC, Shriram Finance, and Mahindra. These stocks faced strong selling pressure throughout the trading session. However, not everything was negative. The IT sector emerged as the biggest winner of the day. The Nifty IT index rallied more than 2.5% as investors rotated into technology stocks. Leading the gains were Tech Mahindra, Infosys, and Tata Consultancy Services. These companies benefited from renewed buying interest as investors looked for relatively defensive sectors amid market uncertainty. Media stocks also performed well, while selected metal stocks managed to stay in positive territory despite broader market weakness. Looking beyond the benchmark indices, the broader market also remained under pressure. The Nifty Midcap Index fell around 1.4%, while the Small Cap Index declined nearly 0.9%. This indicates that selling was not limited to a few large-cap stocks. Market breadth was clearly negative, with significantly more stocks declining than advancing. Such market behavior often reflects weak investor sentiment and increased risk aversion. Let's look at what technical analysts are saying. Many market experts believe that the Nifty is currently experiencing a healthy, not limited to a few large-cap stocks. Market breadth was clearly negative, with significantly more stocks declining than advancing. Such market behavior often reflects weak investor sentiment and increased risk aversion. Let's look at what technical analysts are saying. Many market experts believe that the Nifty is currently experiencing a healthy correction after a strong rally seen in previous weeks. While short-term momentum has weakened, some analysts do not view the current decline as a sign of structural weakness in the market. According to technical experts, the immediate support zone for Nifty lies between 23,250 and 23,230. If the index breaks below these levels, further downside toward 23,100 or even 22,950 could be possible. On the upside, resistance is expected around 23,500 to 23,550. A sustained move above these levels could trigger a relief rally and improve short-term sentiment. The Bank Nifty is also showing signs of weakness. After failing to sustain above key moving averages, the index has corrected sharply over the last few sessions. Analysts believe support exists near 53,100 to 53,200, while resistance remains around 54,000. Volatility has also started rising. India VIX, often called the fear gauge of the market, moved higher during the session. Rising volatility generally indicates uncertainty among investors and traders. There were also several stock-specific developments that grabbed attention. Axis Bank remained in focus after increasing its stake in Axis Max Life Insurance. Meanwhile, Tata Chemicals witnessed pressure following reports related to Tata Sons and RBI discussions. On the positive side, Zee Entertainment gained attention after securing the India broadcast rights for the FIFA World Cup 2026, which boosted investor confidence in the stock. Auto companies reported strong monthly sales numbers. Maruti Suzuki, Tata Motors, and Mahindra all delivered healthy operational updates. However, the positive sales data was not enough to offset broader market weakness. Looking ahead, investors should closely monitor three major factors. First, the RBI monetary policy announcement and commentary. Second, developments in the Middle East and their impact on crude oil prices. And third, global market sentiment, especially movements in U.S. markets and bond yields. Despite short-term volatility, India's long-term growth story remains intact. Strong economic fundamentals, government spending, infrastructure development, and continued corporate earnings growth continue to support the broader investment outlook. However, in the near term, traders should remain cautious and manage risk carefully as markets navigate geopolitical uncertainty and inflation concerns. So, what do you think? Is this just a temporary correction before the next rally, or could markets see even deeper declines in the coming weeks? Let us know your thoughts in the comment section below. If you enjoyed this market update, don't forget to like, share, and subscribe to the channel. Also, turn on the notification bell so you never miss the latest stock market news, investing insights, and business updates. Thank you for watching, and we'll see you in the next video.